6:14, time now for business news, and we say good morning to Mike Eppel on this Wednesday morning, the morning that we know the Bank of Canada is going to be raising those interest rates again. We've been talking about it for weeks, and here it is.
Yeah, and this is good morning, Tammie, and welcome back, by the way. Nice to see you.
Thank you.
Thank you.
Missed you.
I missed you too.
Thank you.
As a matter of fact, I wish
Eppel missed me.
I wish that we could talk about something less painful than borrowing costs going up, but that's unfortunately where we're at this morning, because today the Bank of Canada is set for its policy announcement, and they've telegraphed that they will be raising interest rates for a seventh consecutive meeting to fight inflation and keep all of the price pressures down, because that's worked so far. Look, the fact that interest rates have gone up as much as they have already this year, we're talking about a 3% jump since March, and maybe 25 or at least 25 or maybe 50 basis points today. Look, this has been a story of economics and consumers of 2022, and what this has done to the housing market and retail spending levels and everything else that interest rates affect. And the fact that we're looking at the highest overnight borrowing costs and subsequent mortgage rates since 2008 is certainly not insignificant. We're going to feel it again if you've got a variable rate mortgage. We've already talked about the tip over of interest rates versus principal payments in variable rate mortgages already before today's announcement. Home equity lines of credit, anything that is tied directly to the overnight lending rate or the prime lending rate at the Bank of Canada more specifically, lines of credit in any situation, we'll be seeing higher borrowing expenses. And we're already at a point, Tammie, where Canadian consumer debt levels are close to record highs. So this is going to be significant. And I think the big takeaway from this morning's announcement, not necessarily the interest rate announcement itself, but the policy guidance about what they're going to do in early 2023.
Right, and that's the other key question.
That's exactly right. And look, it takes time. Aside from what we've seen in real estate, the rest of the economy, it takes time for interest rate increases to ripple through. So the Bank of Canada might just say, okay, we're going to wait here to see what's going to happen next.
All right. Good news, though. Gas prices looking pretty good so far.
Look, this is, I don't want to be a prognosticator, because you get into trouble when you do that. But I will say that we're seeing a lot of the things that caused the peak of inflation earlier in the year start to cool off a lot right now. One is the price for gas, which is this morning below $1.41 a liter. Still expensive, but back to more historic norms, I'd say. The price for oil is an economic barometer, and it's below $73 a barrel this morning at its lowest price point of the year. Lots of worries about China, lots of worries about economic slowdown in early 2023. Demand for oil has dropped. So that is a potential inflation bellwether. The price for lumber this morning is down to a multi-month low. Remember in 2021, there was a lumber shortage and lumber prices were skyrocketing, and the cost of building everything was going through the roof, pardon the pun. That's cooled off a lot. So, these little indications that, things are getting back to historic norms for pricing might be a silver lining or a precursor to a falling inflation rate, and that'll take a lot of pressure off central banks to raise interest rates that much more.
You meant that pun, by the way.
I did.
You did.
I did, okay. Which is pretty good for me at this early stage of the morning.
Very good. Congrats. All right, Mike. Nice chatting with you again. We're out of time, but we'll chat with you again tomorrow. Thanks so much.
Thank you.